What's up, everyone? It's Adventures in Bitcoin, and we had a nice day today. Bitcoin did. Nice little pop there. All of a sudden, my YouTube feed started blowing up with people doing crypto videos. A lot of people who have been silent for a while getting excited again. Why did this happen? There's a lot of positive news items. I said way back around here, around the April timeframe, I said that Bitcoin was going to go in one of two scenarios. One, it was going to recover quickly, or we were going to have this long, drawn out scenario all the way down to this trend line here, this red trend line that I drew at the bottom. This would be your phase 2 or phase 2 line. If you follow hyperwave, it would pull back to that, completing the hyperwave, and then it would find the bottom and then return to new highs. So it's been following that, this descending triangle here, and it's still playing in this space, so we're not out of the woods yet, even with all the good news items. And what I saw was here, if you look at this Fibonacci retracement that I have drawn from, the $1,000 level when Bitcoin was $1,000, when this hyperwave or this bubble first started, up to the very peak. And these retracement lines give you, significant points of resistance and support. So we have this support here at the bottom of this blue area, and that kind of coincides with the end of this descending triangle and this phase 2 line. It's like they're all coming together. You can't see what I'm talking about. I'll draw a little circle here. I'll put it in green. This area right around in here. So I see this playing out like coming down here before rebounding hard. And it could do that at any time, really, because everyone's looking at this, making the same decisions. We're all seeing the same charts. It's not rocket science. So people try to get ahead of it. If they know it's going here, I mean, what's the difference if you bought here or if you buy here? It's the same price, right? If you're bullish on Bitcoin and you're bullish long term, it really doesn't matter. Or if you follow dollar cost average, you've been just buying throughout this whole, no matter what the price is, every week, every month, every day, whatever makes sense for you, you're buying a little bit here, a little bit there. But I'm really liking the way all these lines are converging together, and we got the RSI is looking good, looking positive there. In here, I think it's going to find some resistance here though, and start testing the support. But it's going into a squeeze, so eventually it's got to make up its mind. It's going to go south or it's going to go north. It has to make up its mind. And of course we think it's going to go north, because it's just, there's only so far, there's only so many Bitcoins, it's only so low that it can go, because there's a lot of people that just aren't selling. And with some of these news items, if you look, Charlie Lee seems to think it's because of his tweet. Bitcoin price pushes above 7.3K USD. Crypto market turns green. Bitcoin and cryptocurrency market attracting institutional investors. Bitcoin price jumps 8% in less than 40 minutes. Breaks crucial 7K mark. Everyone wants to know what caused Bitcoin to surge. IBM is co-developing with Stellar. There's been a lot of positive news and not too much negative news past couple of days, which is all very bullish. So what does it all mean? It means maybe you should start buying Bitcoin again. Maybe not. I'm not the one to tell you what to do, but I know I'm going to stop buying again. I'm going to start buying Ethereum again, because I just think Ethereum is going to do better. I've nothing new there. I've been saying that for a while. And I like a bunch of altcoins. So once you get your crypto, once you buy your crypto in Bitcoin or Ethereum, you may want to start dabbling in some of the altcoins. And I thought I'd get into some of the altcoins, what they do, and kind of how how I see it. So I made this little spreadsheet here so that I can kind of organize it in my mind. So I'm just going to run through them real quick, and my thought process is, and how I separated them is the blue ones, or I call the blue chip, like blue chip stocks. These are your blue chip coins. They're your staples. The one that I feel should be in, a healthy portfolio should be pretty heavy in these coins. Followed by this orange, I have growth coins. These are coins that I think have the best, the brightest future as far as growth. So the one that's going to be around the longest. And then I made these penny coins, kind of like penny stocks in yellow, were the ones that are kind of a long shot, but they still they're solving a particular problem or a technical challenge that I feel that will make them stand out above the others in their class. Now, how I judge these is based on scalability. Scalability because Bitcoin, Ethereum are the oldest. They're the most valuable of all the cryptocurrencies, but they're the oldest, and they're also prone to some issues, some scalability issues, which you've seen with Bitcoin and Ethereum with the gas prices and the network getting congested, and with Bitcoin how expensive it can get to transfer micropayments when the network is congested. So scalability is what some of the newer coins are trying to solve. They're trying to solve the scalability problem. Interoperability, we want to make sure that these coins, that we can hold them in various wallets, whether it be in a PC, a Mac, a smartphone. So we're looking at interoperability. Sustainability, we want to make sure that these things are going to be around next year, the year after, 10 years. We want them to have sustainability, the ones that are most likely to be sustainable. We know that regulation is going to be a big deal going forward with crypto. If a cryptocurrency wants to be successful, it's going to have to make arrangements for regulation, which is coming. It's already happening. So it has to be regulator friendly. And of course, liquidity. It doesn't matter how much a coin goes up in price if you can't sell it, or if it's only in a few markets. We want to make sure it's widely adopted and a lot of exchanges carry it and it's easy to sell. All right, so we'll skip Bitcoin, Ethereum. You know what they are. Ethereum is basically a cryptocurrency with the added benefit of having decentralized applications and smart contracts running on top of them. XRP is a very controversial one. It's a cryptocurrency that was designed to support the central banks. The use case there is for payment providers, a way for them to accept payment in XRP as opposed to the native currency of the person who's buying. So it really doesn't matter what currency you're using. And also to be able, for banks to be able to transfer money from one bank in one continent to another continent and save on the transfer fees. So because of XRP is associated with central banks, that it has kind of a bad rap with the cryptocurrency, some of the cryptocurrency enthusiasts. Next we have Litecoin. Litecoin is actually the first fork of Bitcoin. Its benefit is faster transfers, and it's widely adopted. A lot of people accept Litecoin. If they accept Bitcoin, they usually accept Litecoin as well. And then way down here at number 14, we have Dash, another fork of Bitcoin that also provides anonymity. So, we all know that Bitcoin is a public ledger, but Dash also provides that anonymous layer where it's harder to trace the transactions. So if you want your activities, your buys and sells to be private using cryptocurrency, then you can use Dash as an alternative to Bitcoin. It is also widely adopted and accepted in a lot of places. All right, so that does it for what I would call the blue chip coins, the oldest, the tried, true, tested, the ones that are going to be around, most likely going to be around for a very long time. They also don't move very quickly, though I shouldn't say that because Bitcoin has moved very quickly last year, and a lot of the other ones as well. But they are less likely to moon 10, 20, 30x than some of the altcoins. But then some of the altcoins can also be very risky as well. So moving on to the what I would call the growth coins, we've got EOS at number 5 in the market cap. What it brings to the table, it's trying to replace Ethereum, trying to be a newer, improved Ethereum. They have also decentralized apps. It's very scalable. They have a lot of money backing them. They raised a lot of money in their ICO. They have Dan Larimer, he was the guy behind Steemit and some other successful cryptocurrencies in the early days. So it's someone who has a lot of experience in the space. The problems with EOS is that it's been accused of being overhyped, and which is kind of true. And it had some pretty major launch issues that they're dealing with. Stellar Lumens is another one I like. It's a low cost payment processing system. Its use case is going to be remittance, where people want to send money in a different currency back home. Like people working abroad, they want to be able to send money back home to their family. They can do that very cheaply using Stellar Lumens. It's also very regulator friendly, which is why I like it. A lot of people aren't going to like that. But if we know that regulation is coming, the ones that are going to be successful are the ones that are going to accept the regulation with open arms. And the adoption is growing pretty fast in Stellar Lumens. They have a lot of partners and a lot of good news coming in their direction. Cardano is another Ethereum type of cryptocurrency where they have also decentralized applications. They're trying to solve the scalability problem. They tout themselves of having private transactions, but yet they're very regulator friendly. So you have kind of the best of both worlds. You can have private transactions, yet the regulators aren't going to frown on it too much. Another benefit of Cardano, it's proof of stake, which is a more greener form of generating new tokens as opposed to mining, which is proof of work, where it depends on a lot of processing power. Very expensive computers just chugging away, eating up power. IOTA, also you can call it the Internet of Things. It uses a new form of blockchain called Tangle. So it's really not a blockchain where the transactions are stacked in a chain. It's more of a network of transactions linked together instead of in one unbroken chain. They tout secure data transfer. They're very scalable and completely feeless. This is going to be designed for sensors, tiny devices, anything that's like your toaster, refrigerator, anything that you can that are eventually going to be plugged into the internet. This is going to be a way for all that data to be transferred. Instead of doing it directly on the internet, it's going to be done on Tangle, aka blockchain, securely. And it's also a cryptocurrency on top of it. Moving on to Neo. Neo is affectionately called the Chinese Ethereum because they're based out of China. They also have decentralized applications. They're trying to solve the scalability problem with Ethereum. Holding the token actually generates gas tokens. Gas is another cryptocurrency that rides on the Neo blockchain that can be sold for Bitcoin. It's currently worth about $12. So it's a good way to earn passive income without putting your Neo at risk. Tron is also a cryptocurrency that has decentralized applications that's trying to solve the scalability problem. Are you starting to see a theme here? They have very high transactions per second, and their use case is going to be Web 4.0, which would be taking on the Amazons, the web-based services that were major disruptors during the dot-com craze. They're looking to develop that on the blockchain. What's great about Tron is they actually outperformed the behemoth EOS with their mainnet launch, which is pretty exciting. Actually, I have a friend who I got into cryptocurrency that went on the exchange and bought a bunch of altcoins, and for whatever reason, he really liked Tron and bought a lot of it and was very happy because he made a ton of cash on this. He did really well, which is awesome. Always glad to see people doing well with crypto because so many people don't do so well. So that is a success story for you. Monero is like Bitcoin. It's just a cryptocurrency. It is not a Bitcoin fork, so it's its own crypto with its own algorithm. The difference being that it's completely anonymous and untraceable. The problem is it's not regulator friendly, but it is the go-to cryptocurrency of choice for people who wanting to hide their activities from buying things online. Ethereum Classic is actually the original Ethereum. It's the original blockchain. It's immutable in that it's keeping true to the original vision of Ethereum and cryptocurrency and blockchain, where once a transaction is made, you can't go back and undo it. That's it from the get-go, and there's no changing it. With Ethereum, they wanted to have the ability to roll back changes, and the original Ethereum group decided against it, so they didn't go with the fork and they stayed with Ethereum Classic. So it's a good option for people who want an alternative to Ethereum. Ethereum Classic was also recently added to Coinbase as one of their cryptocurrencies. It was kind of a shock that they did that. Out of all the cryptocurrencies, they chose Ethereum Classic, but that it reflected in a nice spike in the price. So moving on, keeping with the theme of growth coins, it brings us to Quantum. Qtum also has decentralized applications. They're looking to compete with Ethereum. They're trying to solve the scalability problem. They're trying to combine the best of both worlds of Bitcoin and Ethereum. They use proof of stake algorithm as opposed to proof of work, which is proof of stake is a lot greener. It also gives people, token holders, the ability to earn more, so it's a nice passive income. The use case for Quantum would be ease of use of smart contracts for businesses wanting to get on the blockchain who basically don't have the budget or the know-how to create their own blockchain. Omise Go is a cryptocurrency that I'm pretty much not heavily, but significantly invested in my portfolio. It runs on Ethereum. Its use case is decentralized banking services. They want to bank the unbanked, people who want to get away from central banks and take control of their own finances. They're scalable, and they have cross-platform interoperability. So no matter what operating system, what smartphone you're using, you can use Omise Go. All right, I think that does it for the growth coins. Moving on to the yellow section, which I call the penny coins. These are the ones that I think, and of course I didn't have time to look at each one of them in depth, but these are the ones that I happened to look at that I thought were significant in their area of whatever problem it is that they're trying to solve. So starting with Tezos. Tezos is a community-governed blockchain. That means people who own the token get to make votes and direct the vision and direct the direction that the blockchain goes. It's a proof of stake coin. Its use case is to replace Ethereum like so many others want to. They have smart contracts, they have decentralized applications, but they also have the Winklevoss twins. The Winklevoss twins are early investors into Bitcoin, and they also are the ones that own and operate the Gemini exchange, which I would say is number 2 to Coinbase in the United States anyway. They're heavy investors in Tezos. The problems with Tezos is they had some legal issues that they're working through. The good news is that they're working through them, and the price has been beaten down a lot because of those issues that they had. So that's can be looked at as a good thing because the price is beaten down, so you can get it cheap. I think they have a bright future. Moving on to Ontology, it's one that I've been hearing a lot of people talk about, so I decided to look more into it. They're distributed digital identity verification and distributed data exchange. This is so you can safely identify yourself, all of which would be safe and secure on the blockchain. Moving on to Augur. Augur is very interesting. It's built on Ethereum. It's a prediction market protocol, and it can be used also as a decentralized exchange. On this network, you can literally make bets on anything, and there's actually been a rise in activity on this network, people betting on all kinds of stuff. I found this article the other day. It topped 1 million and accelerating. So people are betting on, you can bet on the weather, you can bet on a political event, you can bet on a disastrous event happening. It's pretty interesting, especially for the gamblers out there who just want to bet on all kinds of stuff. It's a way for you to earn income, and it's also a way for you to go and see kind of what the consensus is thinking, because it's a prediction market protocol. So they use that data to be able to, you can harvest that data for various use cases. Verge is another one that's very popular. It's a private and secure cryptocurrency. It's completely untraceable. The wallet actually runs on the Tor network, which is the Onion network, which is completely encrypted, and it's like basically like using a VPN. It's cross-platform, can use it on any smartphone device, any operating system, and it's already very widely adopted, which is what you want to see with a new emerging cryptocurrencies, that people are actually using it. Moving on to Golem. Golem is a centralized sharing of computer power. Golem is a decentralized sharing of computer power, which is very interesting. You can actually rent your CPU, basically your processing power, to others and earn the Golem token. The use case is for things like CGI rendering, major number crunching, and again, it runs on the Ethereum blockchain. It's basically a protocol and a cryptocurrency that runs on top of Ethereum. Komodo is also decentralized application, smart contracts. They're solving the scalability problem, completely anonymous. Therefore, when you want to go and you have a business, an idea, and you want to crowdfund, you can go on there, create your token, and sell it. And get it out there, and people can invest in your idea. It also has a decentralized exchange, which is currently in its beta phase. And I think that's it. Kyber Network is something also I was looking at. I didn't include it in this list. Kyber Network is going to be like payment processing, decentralized exchange, applications that are completely liquid. They want to take away the fact that you have to match a buyer with a seller. So it's very interesting. I need to look more into it. I know the crypto grinders are always promoting this one, so it may be something you want to look at. So that's it. That's all I have. That's all I really want to talk about. That's kind of enough, actually. If there's any of these that I've missed that you are excited about, that you know are just going to be the cryptocurrency to watch this year, please go ahead and leave a comment. Let me know, and we'll look into it. So that is going to be it for me. Stay profitable, my friends. Leave a comment, like, subscribe, and we'll see you on the next video. Peace.